According to the current government spending plans published by the OBR and NIESR's current forecast, the government will not meet its budget deficit target until 2031. In order to meet these targets, NIESR estimates that it will need to raise revenues of approximately £61 billion per year on average over the next few years. Further to this, government interest payments as a percentage of their total expenditure have gone up from 8% pre-pandemic to around 11% post-pandemic as a result of the interest rate hikes and higher debt burden. This means that the government is spending around 3% less of its total budget than it could have the space to do as a result of these interest payments. For NIESR, it's very important to ask the question, why do we care about these targets? Why does it matter? What is the impact on the economy? Well, if the government doesn't meet its targets, there's a potential worry that this will lead to further inflationary pressures, which will mean that the central bank has to keep its interest rates higher for longer, which is going to be bad for the economy. If the government doesn't meet its targets as well, it could cause further business uncertainty as businesses worry about inflationary pressures in the future or interest rates being higher for longer. This can lead to an adverse effect on business investment. And that is why it's sometimes seen as important for the government to meet its fiscal targets. However, we should be aware that these rules are imposed by the government and can be somewhat arbitrary at times. So we need to take a look at the broader economic picture. For example, government debt soared as a result of COVID, but I don't think anyone would agree that COVID payments should have stopped or that the government should not have done anything in response to COVID. So in this situation, you can see where not meeting fiscal targets was a benefit to the economy. If the government wants to meet its fiscal targets, there are several options available to it. It can either raise taxes or it can cut spending. If it cuts spending, it may need to make sure that it doesn't cut investment spending, as this can lead to decreases in productivity and growth, which will affect the economy in the long term. If it focuses on taxes, it would be preferable to increase income taxes, as these have the least distortionary impacts on the economy. There are three key risks that the government will face when thinking about their public finances over the next 3 years: geopolitical risks, risks to do with public infrastructure, and risks to do with climate change. Geopolitical risks can occur when conflicts and wars happen. This can push up energy prices across the world and cause further inflation in the UK. The UK government has also pledged to increase its defence spending to 2.5% of GDP, which will, of course, put further pressure on public finances. The second risk, public infrastructure, requires that the government spend enough to make sure that public services are maintained at an adequate level. There needs to be a boost in productivity and growth, and the government needs to fund this over the next few years in order to achieve this goal. The final risk is to do with climate change. This is a serious issue and requires a lot of investment in green technology and infrastructure to make sure that we meet our net zero targets by 2050. For example, the government will need to invest in the energy, building, and transport sectors. One study estimated that they will need to increase their investment by 1% of GDP, which is about £26 billion. Incoming parties will need to think very carefully about these risks when they're planning their expenditure over the medium term. Having said all this, it's vitally important that parties think long and hard about what their fiscal targets are, whether they're appropriate, and how they plan to meet them. If they have a fiscal target, they need to realise that there are trade-offs and costs involved, and they need to take a holistic approach when they're looking at the economy to make sure that everything is worth it.